As we wait for MiCA's provisions to apply, before that, it seems like the EU governments are moving to toughen bank capital standards, which could see unbacked crypto treated as the riskiest kind of asset for lenders to hold. Can you break down the talks around this new legislation and what it could mean for assets like Bitcoin?
Sure. Well, MiCA isn't the be-all and end-all of crypto legislation. Another key question is, will traditional finance players like banks start getting into crypto now that it's become all respectable? And the answer from this other parallel piece of EU law that we see is probably not, because the EU is going to introduce all these new rules saying, Bitcoin is still massively risky. We don't want the kind of turbulence we've seen in the crypto sector recently spilling over into the banking sector. So if you hold Bitcoin or Ether, it's going to be treated as the riskiest kind of asset at the 1250% risk weight, which is the highest possible ones they can award under these international bank capital rules. It's a slightly better story for stable coins that are tied to a currency or tied to another asset like gold, which will have a slightly lower risk weight depending on exactly how they work. And that is in recognition of the fact that those products are now going to be regulated under MiCA, so they're viewed as a bit safer and a bit healthier to hold. But for what they call unbacked crypto assets like Bitcoin and Ether, it's really going to be greatly discouraged by these rules for the banks to hold them. And these are legal talks that are entering their closing stages. We already knew lawmakers in the European Parliament favoured being really tough on the crypto sector here. And from what we've been hearing and what we've been reporting in the story last week, it looks like those talks are coming to a close, and that position is basically going to hold sway in the final version of the legislation. We haven't seen the final thing yet. It's still to be agreed, possibly as soon as this week, this Thursday. But it does look like they're going to have those tough new rules included, which aren't going to take effect immediately. But banks are going to start preparing as soon as they know what the framework is.
Jack, real quick, this is a really big question. We have 1 minute, but just, go for it. Why is Europe not in the mess that the US is in with the whole securities thing? Is there just a simple way to explain why they don't have the same problem that we do, which is we don't know what is a security or what's not a security? If you could just quickly sum that up, that would be great.
Yeah, well, I mean, it's quite hard to answer in 60 seconds, but Europe is not, it doesn't have the same kind of two-party system that the US does. It's used to having lots of different people out there with lots of different views, and to building consensus. So it's definitely taken them a really long time. I mean, you look back at the first recommendations about, do we need consumer protection rules for crypto? Yes, we do. That was in 2019, 4 years ago. It's going to be another year and a half until they take effect. So Europe does not move slowly, but it does move with a certain kind of momentum. And, once it sets a draft bill in motion, it is pretty effective at gaining consensus to make sure it actually does happen finally. Also there is a core of officials who are involved in this work, who really do believe it is important to promote crypto innovation. And in spite of the bad headlines and the FTXs and all the scandals we've seen, they still do believe that blockchain is going to be really important to promoting innovation in the future, and that therefore you do need some rules specifically for that sector.
I can't believe you need rules for Doge.
Even Doge.